This is Greg Vincent with Ag Web. We're talking to Jerry Gulke for our weekly Ag Web market wrap. And Jerry, pretty good week this week on futures. What went on there?
Well, we've had soybeans, for one thing, broke out of their long sideways congestion period. And what's interesting about November beans is that we had this thing going sideways a long time. You know, if you can visualize in your mind that we were around this $9 level and we would break it. In fact, we were $9 or less, below $9 last October at the peak of harvest. And then we tested it in February, and we tested and again in March, and again in May, a couple different times, and actually broke to the downside as if, well, the party's over, we got a crop coming, and we're going to $7. Turned right around and went back up again on a kind of a weekly reversal, and now we're back over the top of the sideways trading range. So looks pretty good. I would think the next upside would be 950, and I think the reason for all this has to do with the wetness we have, and traders understand that if it's wet now, you're going to be shallow rooted, although beans don't get real deep anyway. But there's still this talk about that ridge coming in. We always see it. You know, they got problems down south. You know, is it going to move into the Midwest? And even, you know, your Weatherman, QT Ag, Elwin Taylor, Cliff Harris, some of those guys are all pushing this thing out to where if there's going to be a problem, it'll probably come in August, and that's when we would affect the beans, not necessarily the corn. So you've got beans technically looking good, and fundamentally you lost some acres in Canada. So that's what's got the beans on a roll, and looks good.
But you're looking at new crop there too, but there's a lot of things going on there with the old crop, isn't there, with some premiums in soybeans right now?
Yeah, we've seen premiums in cash over futures in places out west like Des Moines and Lincoln, Nebraska, and Omaha, in those areas that they hadn't seen in quite a few years, I think. And that's mainly, they tell me, because of the difficulty in getting the commercials getting their hands on soybeans, and in order to crush to make the meal. And in fact, some of our clients who are meal users have told me that their bids from ADM and some of the rest that would deliver meal would be, I will quote you, you can price it off of the futures in meal prices, but I won't quote you a basis, and we won't know what we're going to charge you until we deliver it. And that's made them quite a bit nervous. So you could protect yourself on the upside by being long futures, which we have. We bought 50% of our meal needs, but there's nothing you can do in the cash market unless you get your physical hands on the commodity. So the guy that buys from us and sells to us really has the control over that flat cash price. And you could think futures go up $15, I think, from where we bought them, and the basis probably went up even more. So in other words, the total price you're probably paying $5 more for that meal per ton, or 10, than what you would have under normal situations. And it's just difficult to get your hands on the meal. And I suspect at some point in time, you'll hear a comment, if things get tight enough, that all of a sudden we can import meal out of Brazil cheaper than I can buy the beans from Jerry and crush them in the United States. And that usually puts the top in the market. But thus far, we've not heard them do that yet.
Not all the action is in soybeans. Corn had a pretty good week as well, did it not?
It closed disappointingly somewhat today. We hit 385 3/4, which for all practical purposes would in December, and it went up there to test that today, and backed off and closed about 5 or 6 cents off the highs. I think here again, just like soybeans, corn went down and did some damage to the chart-wise and support-wise, broke some support, and all we did is went back to the September lows before we had the freeze in December corn, almost exactly, which is kind of ironic, but made the complete circle, went back to where we were last September, and before we heard about the late maturity and all that, and then rallied from there. And of course now it's how much did we lose in the northern part of the country, and what's China going to do? And I think there's more to this than just we got good weather, but I think the market, it's the futures market, is looking ahead. And China's been buying some corn, but not enough to really set this thing on fire. We think there's going to be more ethanol used, but now EPA said they're going to wait till this fall. And I think must be enough uncertainty in the government circles and EPA and USDA to say, we better make doggone sure that this corn is there, and we don't lose some corn because of heat or because of too much water or whatever, before we start pumping 15% and look like idiots and run the price of food up prior to the election. And again, if you think about it, they're not going to do anything apparently now until after the election. Who knows? So they're delaying this whole thing and hurting the demand for it. But I think they're covering their bases. They want to make sure this 13.5 to 14 billion bushel crop is really here, and China just doesn't buy us out of into a shortage. So it looked good as well. We've got the makings of, and I kind of watch this. In June is a key month kind of for corn, and I thought we'd make the lows in June, maybe the third week, and it looks like we made them a couple weeks ago. But we are very close to taking out the May highs in June. So we've got the crop report out on June 30th. So if we can close, say, above another nickel higher than where we are now, we will have taken out May's lows and highs. So that would be a monthly key reversal higher if we did that. Now, the June 30th report, which is the last trading day of June, can make this thing go up and down a dime probably, depending upon what kind of acres we come up with. And so we'll have to wait to the end of June to see whether we know for sure we posted the lows, but it sure looks like it. The market told us in the support that's under there that there's a lot that in the lead contract in July, which is the demand month, there's a lot that people can do with $3.50 corn. That's about $3.20 on the farm. Ethanol will come into use, and feed usage, and China will buy it. So,
but now you mentioned the weather situation just a minute ago, and now we're talking about some of these other things. How is that all going to play in together, and how important is the weather going to be going forward?
Well, I think you got to set your sights on that, proverbial first part of July type of thing, and if we see this carrot out there with the weather that could come to hurt us in some parts of the country, and I think most of the traders starting to understand this is not like last year. We started out poorly in weather, and we just got good. Our ratings got good, and they stayed that way. Everything that needed to happen happened pretty well, and I know the South Carolina, those places had really good crops. Remember, we were talking about that it was the fringe states and corn that really made this crop, because the guys that normally get 130 to 150 got 160 to 180. Now we've got a little different situation. We do have pockets of too dry, too hot, and maybe too wet in some cases. So I think we got to wait until maybe the July 10th crop report to see what the government's going to plug in for new numbers in the yield, and they've got a lot more to deal with this year as far as information purposes. The crop is planted, you've got the ratings, and you're way ahead of last year. So the July 10th will be probably just as important as any other report we've had, and that'll come, of course, right after the June report. And I think that first week and first 10 days of July, you got to start looking at planning ahead to say, all right, where are we going to be? And if we're there, what am I going to do to protect myself from this level? And
if you look at our ag web poll this week, that's where in those fringe areas are where people appear to feel the best about their crop.
Yeah. And I think if you've got good flat black ground in central Illinois and you got too much water, you've got a concern. If you're in the rolling hills of northern Illinois where you don't raise much on the top of the hills, it looks good all over, and we'll make up quite a bit of that if the weather continues. But again, I think here again they're looking ahead into our carryover is we can stand a little increase in yield in the United States and still not get that carryover to over 2 billion, and I think it's around 1.6 now. And you carry that into 2011. 12 next year at this time, we'll be talking about whether or not we have enough corn to meet the increased seed demand and exports that hopefully will come back because of the world economy. Better be better by then, or we'll probably be talking about something else, the poor economy, rather than how much corn we got.
Well, you're watching some other grains too that look to be pretty good, are they not?
At some point in time, I'll watch the rapeseed, of course, and if that gets overextended on the price side to where it becomes economically feasible for China and some of them to buy soybean oil instead of rapeseed because it's cheaper, then you'll see soybean oil going higher. And that looks like maybe that situation would evolve this fall and maybe into next year, and that looks pretty good.
All right, that's Jerry Gulke, president of the Gulke Group, top producer, market analyst. Thanks, Jerry.
Okay, thank you.